Health insurance premiums have climbed 47% in the last decade. Wages have gone up 32%, and that means every year you're working harder just to give more of your paycheck to an industry that hides what it actually pays. You're being robbed. For as long as I can remember, my work has centered around one core principle: helping people improve their monthly cash flow. Whether it's a young family buying their very first home, an investor trying to maximize their monthly returns, or a homeowner who's sitting on untapped equity, I've always approached the mortgage and real estate world with the mindset of, how do we structure this in a way that gives you more breathing room every single month? Maybe that's securing a home at a better than market rate. Maybe it's refinancing a loan that was structured by somebody poorly the first time around. Maybe it's helping an investor access capital through a home equity line to buy another property. In every case, the focus is the same: increase cash flow, build wealth, and give people options. That's been my mission in mortgage and real estate for over 20 years. But recently, I had to apply the exact same principle in a very different part of life. Not in a house, not in an investment, but in my own health. So let me walk you through what happened. At the end of 2024, I was hit with something I truly wasn't expecting. My employer-sponsored health insurance plan, the same one I've been paying into for years, jumped from $1,800 a month to $2,700 a month for my family of four, my wife and two daughters. That's $900 more every month, or $11,000 more a year, just to keep the same coverage. At the very same time, I was dealing with a serious health issue. At age 45, I was diagnosed with avascular necrosis, a torn labrum, and arthritis in my right hip. If you don't know what that is, let me paint a little picture for you. It's when the blood supply to the bone is cut off and the bone literally starts dying. In my case, my hip was deteriorating, collapsing under its own weight. I tried to convince myself that there might be another way, another treatment. I mean, I'm 45 for crying out loud. I've played college sports. I've been athletic all my life. I played golf all the time. I went to physical therapy. I went to 3 orthopedic specialists. I got an MRI, and the verdict was the same across the board. You need a hip replacement, and you need it now. And I'll be honest with you, this was not an easy thing to swallow when you're at 45 and having the career that I've had. It's not the kind of surgery you expect until much later in life. But the reality was that I had to take action. My hip could collapse literally at any moment. So I made the decision. I chose a surgeon at Piedmont Hospital here in Atlanta. And in February, I went under the knife for a full hip replacement. Now, when you go into major surgery like that, the bills start flying in before you've even been wheeled into the operating room. Piedmont sent their estimate. The outpatient center sent theirs. The anesthesiologist had their numbers. All in, the total estimate was around $86,000. Here's the thing about health insurance. I knew my deductible was going to get blown out of the water with that number. That didn't surprise me at all. What did surprise me came later, after the surgery, which was successful, by the way, and got me back on the golf course by April. Modern medicine really is truly amazing. I finally took a closer look at the insurance payments, and what I saw raised all kinds of red flags. The insurance company had billed me based on the deductible tied to that original $86,000 number. But when I looked at what they actually paid out, it was less than half of that. In other words, they charged me based on a number they never intended to pay in the first place. The providers didn't get $86,000. They got a fraction of it. And yet I was stuck footing the bill based on that higher amount of $86,000. That's when it hit me. This was exactly like the mortgage world. People paying more than they should because they didn't know any better. Families stuck in bad loans, investors losing cash flow because of poor structure, and now me, a mortgage professional, staring at a health insurance bill that made no sense. I got taken advantage of, and not just by one individual, by an entire industry that is supposed to be there to protect me and to protect my health. I've always believed that when you get squeezed like that, you've got two choices. You either accept it as a cost of doing business in life, or you go find a better way. I had to accept what already had happened. They took my money. They replaced my hip. But I sure as hell am not going to let me or my family get taken advantage ever again. I wasn't about to just accept it going forward as that's the cost of doing business. That's just the way it is. Luckily, around that time, I'd actually been introduced to an alternative type of healthcare coverage called a Mighty Well plan. And truth be told, at first, I was more skeptical than anybody. Health insurance is one of those things that most people don't question. You sign up through your employer, you watch your premiums go up every year, and you just tell yourself there's really no other option. But the CEO of the company had my ear for a couple different reasons, so I dug in. I studied the details, I compared the numbers, and here's what I found. By switching, I could cut my premium from $2,700 a month. Remember, that was my original insurance. $2,700 a month down to $945 a month. That's a saving of $1,755, $1,755 a month, over $21,000 a year back into my family's pocket. That's not just savings. That's real cash flow. That's the same kind of restructuring I do every single day for my mortgage clients. But it wasn't just about the numbers. The plan itself made sense. It covered all the preventative care we needed, doctor visits, prescriptions, telemedicine. It gave us a set copay, $20 for regular doctors, $50 for specialists, $200 for things like MRIs. Prescriptions as low as $5, $10, preventative screenings included. And for the bigger stuff, the unexpected stuff, it had what's called a shared plan. Anything over $1,500, which was my plan, was covered. My family's out-of-pocket max was capped at $3,000 for the entire year. Compare that to my previous plan, $5,000 deductible. My out-of-pocket was $15,000. Hidden charges, they're all over the place. Traditional insurance, you start paying attention to traditional insurance and you see how corrupt it is. Now, let me zoom out a little bit because this isn't just about me. Starting on January 1st, 2026, premiums across the board are rising. Employer-based health plans are projected to go up about 12% nationwide. Some employers, they're going to eat part of that cost. Most won't. And most of the costs will be passed on to you or you'll receive a lesser product. Marketplace plans, the ones people get through the Affordable Care Act or Obama plan, are also going up. Subsidies are shrinking. Families that were paying zero or close to zero are now looking at $40, $50, even $100 a month. And now that may not sound like much to some of you, but for a family that's already living on the edge of poverty, it's a gigantic hit. And for those in the middle class, the ones that no longer qualify for the big subsidies, that increase is way worse. Hundreds, and in a lot of cases, thousands of dollars a month, not a year, thousands of dollars a month more. It's astronomical. So here's the reality. Millions of Americans are about to be squeezed the same way I was. Higher premiums, higher deductibles, less transparency, and most of them don't even realize that the other options are on the table. That's why I'm telling you my story. Because just like in real estate, sometimes the best thing you can do for your financial health is a refinance. Not your home, not your investment property, but your health insurance. When I say refinance, I mean restructuring something that's costing you too much money so you can free up cash flow and live a better lifestyle. In mortgages, that means a lower rate, a smarter loan, or tapping equity. In healthcare, it means stepping outside the broken system and finding a plan that actually serves you, not the other way around. For my family, that refinance meant going from a $2,700 a month premium to a $945 a month premium. Significant savings, all while still having a peace of mind that my kids and my wife are covered. It meant knowing that if my daughter gets injured in a cheer, we're covered. If I have another surgery, we're covered. And it meant doing it all without draining every last dollar of our income. And that's not just families like mine. These plans are available for individuals in their 20s who are just getting started. They're available for the middle-aged parents juggling kids and careers. They're available for small businesses trying to offer employees a benefit without bankrupting the company. Even larger companies can take advantage. The truth is, there isn't one perfect plan for everybody. We all know that. But there are options. Real, affordable, transparent options that most people don't even know exist. So here's my message. I've spent my entire career helping people refinance their financial lives through mortgages and real estate. And now I've found a way to do the same thing in healthcare. If you've ever worked with me, you know I care about one thing: giving you a strategy that makes your life more affordable, more manageable, and ultimately more free. Healthcare shouldn't bankrupt you. It shouldn't eat away at your financial future, and it shouldn't be a system where you pay more for less every single year without questioning it. I'm living proof. This is a true factual story. Check my socials that there's another way, and I believe just like refinancing a home can change a family's financial trajectory, refinancing your healthcare can do the exact same thing. So if you're feeling the squeeze, if you're looking at your premiums for 2026 and wondering how you're going to make it work, I want you to know this. You don't have to accept it. There is a better option, and I'm here to help you find it, because sometimes the smartest refinance you'll ever make isn't on your house, it's on your life. And that's guaranteed. And I'm telling you right now, if you have questions, I am happy to put you in contact with my team who will help you on your new healthcare coverage plan.